Hey there, welcome to the channel. So today we're going to look at the CPI that just came out. Ugh, what a disaster. All right, so basically, BLS released their CPI numbers for today. Really kind of came out very bad. If we look at the month over month, this is the one that that Joe was bragging about, that inflation went to zero, et cetera. Well, it's now ticked back up to zero point 0.4. This is on the month over month. So, zero point 0.4, that's the change from this month to the previous month. So when you look at that, you basically have multiplied it by 12. So that's a lot of inflation that we got on there. And the most significant thing that happened here is we look at this BLS report over here. We can see that in the blue line here, we can see that, hey, look, it peaked and it's on its way down. It's not going down super fast, but it's on its way down. So this is the overall not seasonally adjusted inflation year over year. Okay. Annual percent change. Okay. So with all the data coming, it's coming off. So that part's good. However, the problem that we have is this is the core inflation. So this excludes right over here, all items less food and energy. So this thing here is broken out. In other words, this thing came up, it got put in a high, and then it started to come off. But the problem is this point here is now broken above this point. So if you were like trading stocks, whatever, this is a breakout. And we have a breakout on core inflation. So the implication of that is that you have the inflation has just gotten into the economy, and it's in there, and it's going to be really, really hard to get it out. Now, let me just show you the nowcast here. So if we look at here, this is going to be the red line here, core consumer price inflation. The red is 6.6%. Now that broke out because previous high was back here about 6 months ago, was 6.4. So 6.4, and we've broken out to 6.6. So it's not a huge breakout, but it is a breakout on the inflation there. And when that kind of thing happens, this is what we get. So the numbers came out, boom, instant sell off. Obviously we have a huge gap down, and as a result of that gap down, you're going to get this counter trend move that is ongoing right now. So if we look at it like the SPY here, you can see that now it's just broken away. And it's really interesting because, like, I was looking at this the other day, and I'm like, look, they're just, this activity in here is like they're just trying to hang on. They're trying to get some rallies in here just to kind of keep it above this recent low here. And then, of course, I would suspect that they may have been, people have been trying to do that, whoever could do that, because they're trying to prevent it. They were trying to prevent it from breaking down earlier in the week, and now you of course have that breakdown because these inflation numbers that came out. So that's kind of where we're at. And look at the Bitcoin. See, the Bitcoin and the Qs are kind of going together. Look, that Bitcoin is going to crack. Look at it. It's going to crack that 18,000. It cracks at 18,000. That thing's going to 10,000 in a heartbeat. Look at the Qs just crack open and break below. So that's what we have. So not a good reaction. And the question really is, so let's go look at the CPI, BLS CPI inflation report, and let's kind of look at where it's coming from. Because, what's going on. So here we're going to look at the percent changes. This is month over month, and this is these numbers in these columns are seasonally adjusted, and then they have a 12-month unadjusted here. So if we look at this thing, our all items is 0.4. So once again, you multiply that, for 12, you're going to get this, right? But this is unadjusted and this is seasonally adjusted. So the numbers varies a little bit. But what happens is, so you have really good stuff happening in terms of energy. Look at these big negative numbers on your energy. You have your commodities, blah, blah, blah. However, one interesting thing is utility piped gas services 2.9. So that one's going up, and energy services over here is 1.1. So overall, when this is why the all items is dropping, right? All items is still on the way down because the energy is in there, and the energy prices are dropping a lot, and it's oversetting the amount that food prices are still going up. But here we go. Let's take this area here, all items less food and energy, and we can see that it's actually worse, right? So if we look at the less energy and food and we come over here, you're at 0.6. So keeping in mind that energy dropped the inflation from by 0.2 on the month. Okay, 0.2% on the month. So that was due to the energy prices declining. And so this means that, like, let's go see here where we're getting it from. It's interesting. So our used cars are dropping like a stone. So that should be good. But one of the areas, where is the inflation coming from? And you see services less energy services over here. And this is a big chunk of it, 0.8 month on month. And a lot of that is actually shelter. 0.7 of that was shelter. And then in there, you also have, so there's different weightings in there, but in terms of the components of that are transportation services and medical services. So this is a real, like, you can look at this and see that, like, this is really a big problem for the Fed. So the problem is that the energy prices are coming off. That should be good, right? That should be great. So what's the problem? There should be no problem, right? But the issue is now all that the expenses of all that has now been incorporated into the economy. So for example, companies, you go get a sandwich, whatever, their prices are going up, their energy prices go up for a time, they just raise their prices. They really don't feel that they have a choice, they just raise their prices. But they're sticky, they're not going to go and lower their prices. And this is across the board. So whether it's doctors and their co-pays, rent, another big one, rent starts going up, well, they're not going to lower it really quickly. I mean, it takes a long time for them. And very often they never lower rent. I mean, they may lower rent if the economy goes to heck in a handbasket and they're struggling to rent apartments. They may actually lower them a little bit. But as it stands right now, there's still enough demand such that they're not going to lower it. So in summary, we have kind of a decent sell-off in the market right now because this CPI report is really problematic. The summary is that, look, even though the all items is really benefiting from the reduction in energy, okay, the core inflation has broken out to a new high. So the implication is that all that inflation, all that push of the energy prices and supply chains and all that stuff has now gone into the core. And it's very difficult. It's from what we've seen the Fed do, the Fed has been able to come in here and knock down the all items, but they have not been able to knock down the core. And therefore, the implication is what they're doing is not completely working. Even though the energy prices are coming off, all that inflation has been baked into and structurally added into the economy. And it's very difficult. The Fed is struggling. They're failing to get rid of that inflation with their increases. So therefore, what is the Fed going to do? Given all the implications or statements that come from them, my guess is they keep pushing. I mean, they really keep pushing because when the Fed opens up a press conference and spend the first 5 minutes of speech talking about how high inflation is hurting people, and they're not talking about the stock market going down 30%, then you know what they're going to do. They're telling you what they're going to do. So that's it for this one. I just, I'm a chart guy, so I like looking at charts. But see, one of the things is this inflation on all items has coming off. But look at the rate of change. It's flattening. And exactly what happened here on the core. It peaked and then it started to flatten. It started to come down and then it flattened. And you can see this flattening and then it starts turning up. And so I am wondering that, look how the rate of decline is dropping. So I'm wondering if we start getting a point here and then maybe the month after start getting a point here on the all items because it's flattening, but it's not coming off. I mean, ideally, you would want a curve coming off. Even if the curve was coming off like at this rate here, then that would be better. But it's not. It's bottoming. It looks like it's bottoming there. That also, I wonder if the Fed's looking at that as well, because they're like, hey, look, we might lose control of the all items in addition to the core. All right. Well, that's it for this one. Bye.